Hello again, Steve Presley here with another update on mortgage modifications. I have had a chance to review the Homeowner Affordability and Stability Plan Executive Summary issued by the White House on Friday, February 20th. There's a lot of general information in there, not a lot of detail. But I want to go over what detail is in there. Number one, there's $275 billion targeted for mortgage modifications. That's great news. Second thing, and very important, you no longer have to be behind on your mortgage to qualify for a mortgage modification. Now, a lot of you have called me asking for help with a loan modification, and I've had to tell you I can't help you because you were current on your mortgage. Well, that's all changing, and that's great news because no longer do you have to be delinquent. In fact, you can be completely current and still qualify for a loan mod. That is fantastic news. Another thing, another detail that's in there, they're going to lower your payment to 31% of your income, which most people should be able to afford. Now, they're going to do that several ways with some government matching money. They're going to lower your interest rate, sometimes as low as 1, 2, 3%, and extend the term of the loan. Whatever it takes to get your payment down to 31% of your income. That's fantastic news. Now, there's a little bit of a catch here. It's actually a good thing. They're going to establish some guidelines. That really is a good thing in the long run. The problem is they haven't established them yet. The target date is March 4th. Now, I had made several calls yesterday on the open files that I had, and all of the banks have stopped doing modifications. And there's really good reason. There's a lot of incentives in this package for the lenders. One very obvious incentive that's in the plan that we can see. I'm sure there's others, but one, if the bank modifies your loan and you make the payments on time, the government's going to pay the lender $1,000 a year for 3 years. Now, I know that doesn't sound like a lot of money, but let's take a Bank of America, for instance, and say they modify 100,000 loans. Now, that sounds like a lot of loans, but Bank of America holds several 100,000 mortgages, so that's not outside the realm of probability. So say they modify 100,000 mortgages. Well, that $1,000 a year becomes $100 million a year. That's a lot of money. $100 million a year for 3 years. Well, the banks want their piece of the pie, and so they're not going to modify a mortgage until they have the guidelines so that they can get that money. So what does that mean to you? Well, it doesn't mean just sit around, because you need to get started. March 4th is around the corner. So go to lowermypayment.us. Get your free kit. Down at the bottom of the page, you'll see a big blue bar. It says download my free kit. It's free. Did I tell you it was free? Because it's free. It doesn't cost anything. So go ahead and go get your kit now, and there's 2 documents in there I want you to pull out, and you can get started today on your loan modification. The first document is instructions for a hardship letter. The second is a sample hardship letter. Take those 2 documents, go over those documents, and prepare your hardship letter now, because you're going to need that. And it's probably one of the most important documents you're going to submit to your lender. So please go over that with care, prepare it, write it neatly, and have that ready to go for March 4th. Now, I expect to be getting some updates on the details of the guidelines. As soon as those come in, I will get those to you as quickly as I can. In the meantime, I want you to have a great day, and we'll see you next time.